Bloomberg Audio Studios. Podcasts, radio, news.
I feel like we need to address two things.
Yes, go on.
One is that I sound like this.
You sound great.
I know.
But it's different.
I have a cold. So it's going to be like the best voice you've ever heard on a podcast for like 10 minutes. And then I'm going to lose my voice and it's going to be over. So it'll be great on both accounts.
Yeah.
The other thing I want to address is, what are you going to be for Halloween?
Oh my God, Matt, I'm so thrilled you asked. I'll probably just dress in all black and put on cat ears.
Okay.
But that's what I do most Fridays.
Yeah. Right.
So what about you?
I think I've dodged this bullet.
Is it a bullet? Isn't it just joyful?
It is joyful to take your kids around in their costumes when you're not in a costume. I shouldn't say I see like the people with family costumes and like, okay, that's cool. And I kind of want to do it, but like not enough to.
Yeah.
For adults, it's got to be creative.
There are onesies out there, but I hear your point.
Yeah. I don't really want to go around.
I'm really psyched. I mean, not to go around in a onesie. I spoke too soon. But I love Halloween so much. Yeah. I'm really excited.
Trick or treat?
I'm an adult and I don't have a child, so I feel like I can't. But we're going to walk around Hoboken because Hoboken goes hard on Halloween. Okay. A lot of the...
This is like sounding like a yes, but okay.
Right. I mean, I'm not going to like knock on doors and take candy. If someone with a bucket of candy comes up to me and says, do you want a piece? Mm-hmm. I'm not going to turn them down. No. That'd be crazy.
Right. Are you going to wear your cat ears on air?
No, I won't.
I feel like one year I want you to wear like a children's ghost costume, just like a sheet with holes for eyes on air.
I usually subtly try to dress up on air.
I feel like you've worn the cat. I feel like we talked about this last year about you wearing the cat ears. We probably
did. Some dedicated listener can tell us. I mean, I have this like Christmas shirt that I try to sneak in once a year. Tomorrow, I think I'm going to wear all black, like a black turtleneck, and just be kind of spooky.
Okay.
But
like just subtle cat ears, just little cat ears.
Maybe like a cat eye eyeliner. Right. But I will mention over and over again that it's Halloween. I love Halloween.
Yeah.
I want to put someone in a ghost costume and just have them walk behind me at some point. Just once.
I think you should actually have a ghost co-host who doesn't say anything. That'd
be kind of funny. They just like a human in a ghost costume.
Sitting next to like someone with like a ghost costume, like maybe glasses over the ghost face,
Yeah, I turn to them and like say something and then I turn back.
What do you think? And they're like, woo!
This sounds great.
All right, we've got your TV show sorted. Now
right.
Do a podcast.
Man, we're just trying to run out the clock here.
We should do the podcast like that.
Yeah.
Just go, ooh.
All right. Scary.
Hello, and welcome to the Money Stuff Podcast, your weekly podcast where we talk about stuff related to money. I'm Matt Levine, and I write the Money Stuff column for Bloomberg Opinion.
And I'm Katie Greifeld, a reporter for Bloomberg News and an anchor for Bloomberg Television. We are in the heart of Magnificent Seven tech earnings, which means we are in the heart of those tech companies just saying how much they're going to spend on AI infrastructure. And it is so much.
It's really like either you do or you don't believe that like the entire world is going to change with AI. And if you believe it, you're like, yeah, sure, $10 trillion, no problem, right? But it is like, it's easy to be nervous or skeptical or make fun of those numbers because it's a lot of money.
Yeah. Well, something that I've been talking about on television and casually with my friends in the newsroom is how a lot of these hopes and dreams and these ambitions of these big tech companies to spend all this money, a lot of it has been able to be funded from free cash flow, but increasingly they're having to tap the bond markets. But as you laid out in a column this week, they have stellar credit ratings, so they don't necessarily want to rely too much on the bond market.
Yeah, it's a mixed bag, right? Like you have a stellar credit rating so you can borrow in the bond market, but like you can't do too much because then you lose the credit rating. So Meta is out this week with a $25 billion investment grade deal.
Yes.
But they want more than $25 billion. And to do that, they have tapped the like I guess, I don't know what you call it. Like people sometimes call it the hybrids market, but also like it's kind of project finance.
Yeah.
It's like off-balance sheet financing. Basically, like they set up a joint venture where the joint venture will operate their data centers and the joint venture will be owned by, in this case, Blue Owl, but in the general case, someone who is basically credit firm but is willing to do weird stuff. And so Blue Owl is the equity owner of the data center and Meta signs a series of contracts that in the aggregate kind of look like debt. Like they sign like leases and a residual value guarantee where like at the end of the term of the lease, they have to buy the chips in the data center. But those contracts look enough like debt that Blue Owl can package it into bonds and sell it to PIMCO or whatever, but also enough not like debt that it doesn't affect Meta's accounting or its credit ratings.
Yeah.
So it's like not debt of Meta for the purposes of like Meta, but it is kind of debt of Meta for the purposes of the people buying the bonds.
So you talked about how this is a fantastic trick that, if you want to call it that has connotations, but
it's just the thing people do, right? It's like, it turns out there are things that are debt and there are things that are not debt, but then there's like this huge middle ground of things that are kind of debt, kind of debt. And like, for the most part, things are pretty binary for like ratings and balance sheet. Like either it's on your balance sheet or it's not. Either it affects your credit rating. Like credit ratings are more not quite binary. Like the ratings agency sometimes gives things partial credit. But you know, if you like check the right boxes, then it's not quite debt, but you can convince people to buy the bonds because they look pretty much like your debt.
Yeah, give or take. You do right though that the bonds for the Hyperion,
the name of the data center.
They priced with a coupon of almost 6.6%, which was roughly a percentage point higher than Meta's outstanding corporate bonds and in line with the average junk bond yields. So I hear what you're saying, but at a certain point, I feel like people and investors see through this.
They do and they don't, right? I mean, they don't treat it like Meta debt exactly, but they, they're happy to buy it at a yield. And they're like, oh, yeah, it's great. It's like, it's backed by Meta. It has structural features that make it not quite as good as Meta debt, but so it trades at a yield that is a reasonable cost of capital for building a data center and kind of keeps it off of Meta's pristine balance sheet. Yeah.
We're talking about this like weird structure, this SPV that Meta is doing.
It's not that weird. Like, this is like, it's weird-ish a little, but it's also like, the basic format of doing some sort of project finance JV. They didn't invent that for data centers.
That's true.
It's been done for a while in a lot of industries in different forms. And, I wrote this week about it's very general purpose. And so Keurig Dr. Pepper is putting its K-Cup manufacturing into a JV so that it can borrow against the K-Cups without tarnishing its credit rating to do an acquisition.
Okay, so it's not weird. I do feel like a lot of folks, myself included, have thought more about this in the past 2 weeks.
Oh, yeah, me too.
Than maybe I have ever.
Yep.
It's a concept that's being more widely socialized than perhaps in the past.
And higher profile.
Yes, that's the thing.
I mean, the other thing about it that is interesting is that it's really interacting with private credit, right? Like, you look at all the private credit firms, and stereotypically, private credit means leveraged acquisition finance. And the reason for that is because, private equity sponsors are willing to pay up for flexible, fast, guaranteed debt. So you can make money doing that. Like you can charge more than the public markets would if you can like offer sponsors a user-friendly product financing their acquisitions. But then these private credit firms, like they have a lot of insurance clients. They want to deploy a lot of money. They need to eventually get into investment grade debt. And it is harder to get into investment grade debt because you go to like Meta and you say, I'll buy your bonds. And Meta's like, sure, our bonds price at, this rate. And it's not super exciting for private credit. But then you do this project financing and you can do a thing that gets an A+ rating and also has a yield. And also you're not competing in the same way with the public markets because regular public market bond investors can't necessarily buy $2.5 billion of equity in a data center, right? Like the private credit firms are a little bit more flexible in like what kind of financing arrangements they can do and a little bit more creative. And so they can do this to get tens of billions of dollars of investment grade financing, which is what they want.
Yeah. I do want to talk more broadly about Meta.
Yes.
But before we get there, so you made the point that, okay, even with this, what they're working out, they also tapped the public market for that $25 billion bond. Apparently it was super oversubscribed according to our reporting, but you think about...
Of course it's super oversubscribed because Meta has capacity to do hundreds of billions of dollars of debt and they don't do it because they want to keep good ratings. So they want a Meta bond.
Yeah, $125 billion of bids for this 25.
So oversubscribed never means anything.
Yeah, well, nothing truly means anything, Matt, but something I've been thinking about, not just as it relates to Meta, but all the spending that all these big tech companies are doing. You think about the typical profile of investing in tech from the equity market perspective, it's like okay, these companies have pristine, tidy balance sheets. They're very capital light businesses, et cetera, et cetera. And I do wonder, if the nature of investing in the tech space is starting to change. And I keep asking people
tech is not capital light these days, right?
I know.
It's the opposite.
It's just, you think like 5 years ago, the conversation was about, intangible assets, and that described what tech
like Meta, right? Like 5 years ago, was Meta called Facebook?
Yeah.
Pretty close. But like, you think about like the stereotypical business model of Facebook is like, it serves a web page, right? It's like marginal cost is zero, right? So it scales like really, really effectively. So Facebook is this classic investment where, venture capitalists put money in and it goes from being a dorm room project to being a $100 billion company with kind of no additional spending.
Yeah.
And that switch just flipped. And now it's just everything is $1 trillion of data centers.
Well, I love talking about Meta because you remember the reason why Meta is called Meta? Because
No, I don't.
They went so big on the metaverse, which we never talk about before. Mark Zuckerberg was lighting money on fire.
I don't really know what that entailed, but it would be funny if there were like data centers out there that were optimized only for the metaverse and are now just like tumbleweed is blowing through them.
I love it.
Right.
But that led to Meta's year of efficiency, et cetera. It was this whole thing.
And now the opposite.
Alphabet and Microsoft, you can make a case for why they're going so hard on AI. When it comes to Meta, I'm not sure what the payoff is. They said that they're investing so hard because it's going to help better target their advertising.
Sure.
But is that...
It's the highest purpose of technology.
Is that $1 trillion endeavor?
Yes.
It's wild. It's wild.
One thing I've learned is that the purpose of the economy is to serve customized ads.
For sure. All the water sources be damned. But I don't know. I'm curious to see how this plays out for Meta. Apparently, Mark Zuckerberg did say on the earnings call, they reported on Wednesday this week, that the company has options if it ends up spending too much on infrastructure. In one scenario, he said the company could use the extra computing capacity for its core business. In another, it could sell the power to other companies.
Or really good metaverse.
Metaverse?
Really good metaverse.
Yeah.
Data centers full of legless Mark Zuckerberg Adam.
I mean, they're still committed
avatars.
to that in their, I believe that falls under the Reality Labs division, which reported a loss of $4.4 billion for the third quarter.
On revenue of 12 cents.
Revenue of $470 million, I'll have you know.
Okay.
Anyway, I think it's super interesting. At least Mark Zuckerberg's thinking about the prospect of maybe they're overbuilding.
Elsewhere in hundreds of billions of dollars of AI spending, OpenAI is a regular company now.
I know. It's exciting. So regular.
It's like anticlimactically.
Yeah.
Like, I was assuming there'd be like years of litigation and like all the state attorney generals and Microsoft were like, okay, good, it's fine. So
well, I feel like
they did their conversion.
At this moment, too, Elon Musk is a bit distracted, which we'll get to.
I'm sure he'll keep suing, but like,
yeah,
whatever.
We'll get to that. Anyway, OpenAI apparently is so normal that maybe they're going to IPO in next 2 years or so.
Yeah, sure.
Maybe.
Right.
That's what Reuters told us.
Sure. I just feel like any large private tech company might IPO in the next 2 years.
I know, but this one, I feel like it urgently needs to.
Really? Okay.
Yeah, they've committed to like $1.4 trillion of spending.
Yeah,
where are they going to get the funds, Matt?
Not from like an IPO. Maybe a little from an IPO.
Sam Altman
Would it be
suggested.
funny if OpenAI and Fannie and Freddie all go public like next year?
God.
Like,
what
IPO.
So many good podcasts. No, Sam Altman said that I think it's fair to say that it's the most likely path for us given the capital needs that we'll have.
Yeah, fine.
During a live stream on Tuesday, Matt.
Fine. They'll tap the public equity markets and the public bond markets and the project finance markets. Mm-hmm. It's amazing. So much money for AI. Yeah, so they're a normal company. I don't know.
A normal company.
Owns 27% of
27%.
The nonprofit owns 26%, but has like super voting board control. It's very hard to be like, we started as a nonprofit, we took donations. They didn't take that much in donations, but they took donations. And now we're a $500 billion private company for the benefit of our investors. And one way to sort of smooth that transition is that the nonprofit will continue to control the company and have like super voting rights. I don't know how that will go for an IPO, but it'll go fine. Like no one cares. Like you could imagine being like, if this company is not run for profit, maybe I shouldn't invest in it.
Yeah.
Seeking an enormous financial return. But no one has ever had that thought.
Yeah.
Or ever will.
Yeah, that's so
like,
quaint.
It's like OpenAI is definitely looking to give you a high financial return on your investment, which is nice.
So do you not take Sam Altman at his words?
Which words?
That they need to do this to get the capital that they need?
Oh, no. I believe that they need to do this to get the capital that they need. But like, even now that they're a for-profit company, they're a public benefit company, which is slightly less than for-profit, but still pretty for-profit. But they're controlled by a nonprofit board, right? Like the nonprofit board still has a
that's where
obligation to put the interests of humanity first. But no one cares about that. No one's worried about that.
I thought that the nonprofit board couldn't fire members.
Well, they're not going to fire him. We learned that lesson.
Well, I know that, but even other members, like other OpenAI executives. So when you say they're in control, I mean, what does that mean if they're not going to fire the people running it?
That's a good question.
Thank you.
The board of directors, right? So like typically one of the main things the board does is decide whether or not to do a merger, and they're too big to do a merger, you know?
Yeah.
Right. Like I don't know how much operational control they have. Like one thing the board of directors does is fire the CEO if he does a bad job, but there's a constraint on that.
Job number one.
Right. Like the board of OpenAI within recent memory has fired Sam Altman, not for doing a bad job of developing products or leading the people or achieving shareholder value, but for the crime of, I don't know, something else. No one really understood it. But it was kind of in the ballpark of like not being for the benefit of humanity or like deceiving the board in some way. No one really knows. And they quickly unfired him and then fired themselves. Yeah. So that won't happen again.
Yeah. That was just about 2 years ago.
Yeah.
It was amazing.
And like in theory, like you can look around at a lot of like boards of big founder-led tech startups. Sometimes those founders do weird stuff. And you can imagine a board firing them, but you can't really because they never would, you know?
There's been so many natural segues to...
Yes, right. Let's move straight along.
Okay. Well, the only thing I was going to say is that when it comes to the capital needs, obviously we've talked a lot about the private markets and the public markets melding, that if you're a private company, you can get most of the funding that you need in the private markets. This obviously is such an extreme example that maybe it's not even worth mentioning, but it is a limit, perhaps, of the private markets.
Yeah, sure. Right. I take that point. Although we're not there yet, right?
No.
Like, this is like they're rumored to be interested in going public in 2027.
In my mind, they're already public.
For now, they have
floated a trial balloon with Reuters.
No. Like, what do they need capital for? They need to like get chips and data centers and compute. Like, they're getting all of that, right?
Yeah.
Like, they're funding it with vague promises of future trillions of dollars of capital raising, right? Like, they have not needed to go public to meet their enormous capital spending needs yet.
Yeah.
Right. They're incurring obligations that might require going public. But like, I agree with you that like, if Sam Altman is feeling the pressure to go public, that does show some limit on the ability of private markets to fund absolutely everything.
Yeah.
But he's got a $500 billion company that keeps signing $1 trillion deals and is not public. So
true.
The limit is, we haven't hit it yet.
If we're looking for another segue, SpaceX obviously is a private company that has a lot of capital needs.
Yes, it turns out that shooting rockets to Mars costs much, much, much less than training chatbots.
What a world.
What a world, right?
Elon Musk.
Yeah.
He's the whole company, the whole board of Tesla. Well, really, Robin Denholm has been on a media tour.
Yeah, Robin Denholm and the board of Tesla are going around to big shareholders and also, frankly, media to drum up support for Elon Musk's big pay package because the shareholders have to vote on it. And the big shareholder advisory firms, ISS and Glass Lewis, have recommended that the shareholders vote against giving Elon Musk a pay package that has a nominal value of $1 trillion.
Yeah.
I really don't like that framing.
No.
Because like basically what it is they want to give Elon Musk 12% of the company. And 12% of the company right now is worth $180 billion, which is a lot of money.
Yeah.
It's not $1 trillion. But in order to justify doing this, they're like, we'll only give him 12% of the company if he hits like these really ambitious operational and stock price targets. And if he hits all those targets, the company will be worth $8.5 trillion and his 12% package will be worth $1 trillion. Mm-hmm. But like,
they're not
it's not worth $1 trillion today.
Yeah. They're not giving him $1 trillion.
Right. They're giving him the chance to get 12% of the stock.
Well, listen, you don't like the $1 trillion framing, but everyone listening to this podcast now is thinking about it differently. So
no, they're not. That's fine.
Anyway.
But yeah, I wrote today on Thursday. It's interesting to me, like the $1 trillion is really embarrassing. No one wants to vote to give Elon Musk $1 trillion.
Yeah.
Like it sounds insane. It's clearly like part of the pushback to the proposal is it's $1 trillion, right? Elon Musk has been very clear that what he wants is to control 24% of the votes of Tesla. He's like, I don't want to be voted out by like dumb shareholders. I want to have like enough voting control that I have a lot of control, but not so much that I can't be voted out if I become insane, which is
right.
Like, okay. And so it seems to me that the obvious solution there is to give him 25% of the voting power without giving him any more stock, which is not easy to do.
Yeah.
And in fact, in an interview with the FT, Robin Denholm said we tried to do that and we couldn't find a way to do it. I don't know, man. It seems to me like you could do it. You could like find a way to give him super voting shares. You could get shareholders to approve that. And then you wouldn't have to give him $1 trillion. You could just be like, we're giving him 25% of the vote because that's what he wants.
Robin Denholm went on Bloomberg TV. You could have stopped her in person and told her about that idea.
I was writing.
You were busy.
I was busy.
Well,
and I wrote it and she can, whatever. Surely they've had that idea because she did say to the FT, like, we tried to do it and it couldn't find a way to work. But I don't know why they couldn't find a way to make it work.
Yeah,
it's tricky.
Didn't she say we searched high and low or something?
It seems tricky. Like, I'm not saying it's trivial to be like, we're going to give this guy a new super voting share. But, you know. Like,
yeah.
It doesn't seem impossible to me as just a guy.
That was an interview she did with the Financial Times. Yes. She also went on Bloomberg Television and said that the board is looking at internal CEO candidates should Elon Musk leave.
Right. They're definitely going around being like, if this pay package doesn't get approved, he is out the door, which is, you know, maybe.
Yeah, she said that the company has a deep bench of executives, which I always like hearing because we never hear from them or about them. So
I think she's also said there's no Elon Mark II, right? It is possible that you can have both a deep bench of very excellent car executives and also not have an Elon Musk light waiting in the wings, you know?
Well, apparently one of them is their global production chief and China head, Tom Zhu, which is funny, I guess, because initially when I read that headline, I was like, oh, it's going to be really interesting to see if like Elon Musk fires all of them because he is CEO, so he could. But I guess
fires all of the
potential internal candidates, yeah.
I don't think he will. I think like if you take them at their word that Elon Musk might quit if he doesn't get this control, it would still be a terrible idea for him to sabotage Tesla on his way out the door. Like he could be mad at the shareholders and he could be like, I'm going to spend my time on something where I have more control because what I want to do is build a robot army and I need to have 25% voting control of anywhere I build a robot army. Right? They believe what they're saying, right? Mm-hmm. That's still not a reason for him to sabotage Tesla because Tesla remains more or less the majority of his wealth, right? And so like if he were to leave in a huff, the stock would tank.
Yes.
But if he were to leave in a huff, but also saying, I've left this in charge of my good friend who's really good at this, Tom Zhu, then it's better for his wealth than leaving in a huff and burning it down on his way out the door.
That's true. He seems...
No, I understand.
It's like a very logical way to think about things, Matt.
Yeah, you know, he's not illogical.
No. He does post somewhat emotionally.
There's weird stuff, but like I think he's going to be rational.
Well, you know, we'll maybe find out, but probably not.
Probably not. Probably the shareholders will approve the package.
Yeah.
I'm guessing. I have no basis in saying that. They always do.
Well, 30% of their investor base is retail shareholders.
He'll be fine.
Yeah.
They're like creating drama, but they'll be fine. But if they're not fine, I'll be very interested to see if he quits.
Yeah, me too.
Mailbag. I do want to talk briefly about some emails.
Yeah.
I'm not going to sing mailbag with a
mailbag
with this voice, but I don't know if you listened to last week's podcast episode, but
if you
it
didn't,
consisted entirely of Katie reciting facts about the new JPMorgan headquarters. But here are some more facts about the new JPMorgan headquarters.
I was worried that people wouldn't like that, but
no, I was sure people would like that.
People did. Well, we got a lot of engagement. This is from Eric.
Okay.
I went on a tour of the HQ as part of an annual meeting earlier this year, and during the tour, they highlighted the HVAC system for the flag. It is actually capable of mimicking the conditions outside the building, so the flag always waves in the way it would if it were outside. Man, it must be going crazy today because it's raining. Yeah, there's a storm.
It's raining in the lobby.
Maybe it's like the Hogwarts ceiling.
Really good HVAC system. Yeah, because we were talking about like there's a flag in the lobby that blows in the breeze, and you mentioned the fanning system, and I was like, is it a guy with a desk fan on a stick? And no, it's a very fancy HVAC system that makes it rain inside. I
have to say that the flag was waving, like there would have to be a strong gust of wind the way it was waving last Tuesday, and I don't remember it being that windy outside.
Maybe it like mimics but somewhat amplifies.
Yeah, enhances.
Like makes it a little, zhuzhes it up a little.
Yeah, definitely.
This is from Ryan. Regarding Matt's observation that the building has a precarious overhang, I don't want to say precarious. It just looks like it might fall on you.
Yeah.
Surely you are aware of the design and construction flaw of the Citicorp building in the late 70s. This is taught in basically all engineering programs today. I assume it must be well known in finance circles too. I think less well known in finance, but not unknown. But yeah, there's a Citi building.
I did not know this.
So it's on, like near us, it's at like 601 Lex. It's like just kind of down the street from the Bloomberg offices. And they built it in the late 70s, and it's very cool. It's like very much like, there's a plaza underneath it, and like a big massy building is on top of like little stick legs. And the famous engineer who designed it didn't take into account quartering winds. Quartering winds. They're like the winds that don't hit the thing head on. And then like, it was a fancy building. And so a couple of like engineering and architecture students like studied it for class projects. And they were like, wait a minute, if this gets a wind from the wrong direction, it'll fall over.
Oh my God.
And they emailed him, or they wrote to him, and he was like, oh no, you're right. And so they like, while people were working in the building every night, they'd go home and like people would come in and shore up the bolts in the building to make sure it didn't fall over.
Great that the engineer was humble enough to take the feedback, but also maybe he shouldn't.
The Wikipedia is a little grim. It's like he contemplated suicide.
Oh. That's not good. I was going to say maybe he shouldn't work again.
I think he was fine. But yeah, it was not a great day for him.
I can't wait to read this Wikipedia article. I will say I would love to see the JPMorgan lobby flag in a quartering wind.
Yeah.
Sounds pretty cool.
Yeah. They should do that just as like a little engineering inside joke.
Yeah.
Anyway.
Nick says, I just went to a meeting there and wanted to share a couple things. Apparently the pub doesn't start pouring beer until 4 p.m. The rumor going around was that Jamie Dimon himself was refused a drink at 3 p.m. We haven't fact-checked any of this, by the way.
I kind of don't believe that Jamie Dimon was like wandering down to the in-office pub at 3 p.m. to be like, I'll have a beer. Like, that doesn't sound like Jamie Dimon.
Maybe they like, also, I don't know.
He could have, like, you could imagine him being like, I'm going to do a little like stunt of like ordering a beer to like demonstrate the pub to people, and like he wasn't served.
Yeah, but I feel like they would make like refuse him once, but then be like, actually, here's the beer. But I don't know. I only have a parasocial relationship with Jamie Dimon, so I'm not actually sure. Right.
We do need to interview the bartender who refused a drink to Jamie Dimon at the Jamie Dimon controlled pub in the JPMorgan office.
I want to go there. And we can look at the flag.
If you're that bartender, get in touch.
No, I want to do a podcast from the pub.
The whipping wind.
Yes.
No, the pub is not in the...
That's on the 13th floor. The flag is in the lobby.
Right, we're going to do the podcast from the pub.
It'll happen.
And that was the Money Stuff Podcast. I'm Matt Levine.
And I'm Katie Greifeld.
You can find my work by subscribing to the Money Stuff newsletter on Bloomberg.com.
And you can find me on Bloomberg TV every day on The Close between 3 and 5 p.m. Eastern.
We'd love to hear from you. You can send an email to moneypod@bloomberg.net. Ask us a question, and we might answer it on the air.
You can also subscribe to our show wherever you're listening right now and leave us a review. It helps more people find the show.
The Money Stuff Podcast is produced by Anna Mazarakis and Moses Andam.
Our theme music was composed by Blake Maples.
Amy Keene is our executive producer.
And Sage Bauman is Bloomberg's head of podcasts.
Thanks for listening to the Money Stuff Podcast. We'll be back next week with more stuff.